Good morning, traders, and welcome to BCR's morning market analysis. First up, let's talk about the US dollar. The DXY held above 99 last week, posting its third straight weekly gain, supported by strong US data that pushed expectation for Fed rate cuts further out. Weekly jobless claims came in well below expectations, confirming labor market resilience, while manufacturing surveys also surprised to the upside. Several Federal Reserve officials highlighted some inflation risks, reinforcing the view that policy will remain restrictive. Um, Markets expect the Fed to hold rates steady this month, with the next cut now seen from June or later in the year. Sentiment also improved after President Trump said he has no plans to remove Federal Reserve's Chair Powell, easing institutional concerns. Technically, the dollar remains range bound with a firm support at the 200-day SMA near 98.72 and resistance around 99.5, reflecting consolidation within a slight upward bias. Next up, let's have a look at crude. WTI rose for a fourth consecutive week, hovering just below $60 as fears of an immediate US strike on Iran eased. Trump softened the earlier rhetoric, while regional allies reportedly urged some delays, reducing near-term conflict risk and prompting a pullback in the geopolitical premium on crude. Despite the volatility, oil remains supported by instability in Iran, political uncertainty in Venezuela, and the disruptions to Kazakh oil exports. Technically, momentum has weakened after last week's sharp reversal, and prices are likely to remain range bound between 56.5 and 62.1 as the market is waiting for a new catalyst. Next up, let's have a look at gold. Gold entered high level consolidation after hitting a record high of 46.43 as easing geopolitical pressure triggered short term profit taking. The broader safe haven narrative still remains intact, with market sentiment still sensitive to developments around Greenland, trade policy, and of course, Iran. Technically, gold continues to trade within a strong bullish structure, holding above the 9-day SMA near 45.47. Momentum indicators remain constructive, suggesting consolidation rather than a reversal, with upside levels still in focus if prices stabilize above recent support levels. Next up, let's have a look at the Australian dollar, which remained range bound between 66.80 and 67.20, supported by expectations that Australian interest rates may stay higher for longer. Recent mortgage rate hikes by major banks reinforce this view as well, while markets continue to price a rising probability of an RBA rate hike by May. Technically, the pair remains in a high level consolidation, with resistance near 67.27 and 67.33 and support around the 66.80 to 67 level. RSI has eased back to neutral, and momentum indicators suggest continued sideways momentum unless a clear breakout emerges on the Australian dollar. Well, that's all for today's morning market analysis. As always, manage your risk and happy trading.